Commercial real estate market has dropped quite a bit. The lending already dropped 54% less originations last quarter. And then as you see that over here, San Francisco, San Jose, and Oakland, they are still ranking the top 10 in terms of the rental prices in the country. And in terms of the demand and supply, we know that in the whole country, we see Austin, Dallas, Orlando, and Raleigh, they have the most job growth, and they also have a lot of building permits. So they are actually going to have an elevated supply and might still actually outstrip demand in those areas. So if you look at this is the multifamily apartment units where they are building, and you see that some I highlighted because they're pretty small. I highlighted some of the California cities here, and our building and completion date expected is still very small compared to what they're doing in New York, Dallas, Austin, Washington, D.C., Atlanta, and Houston, etc. So we are definitely behind in terms of building. And hence, we have much higher demand and not enough supply. All right, so East Bay multifamily report, if you look at the market cap rate in the East Bay, we are ranging around average about 4%, with East Oakland have the highest cap rate of 4.6%. And I highlighted Berkeley because Berkeley has about 4% cap rate, but then they have a pretty good number in terms of rental price at $2,724. Just kind of side note is that the higher the cap rate, typically you see that it's cheaper the property is, and cheaper property a lot of times could be because the rental price is a little bit lower. But in this case, even though Berkeley, we have 4% cap, their rental price is one of the highest in the East Bay area. And the rent growth also over here, that the best rent growth area is in Oakland Hills and Alameda, second by Alameda, and the third is San Leandro. And if you look at Silicon Valley multifamily, we're ranging at about mid 3% on the cap rate. And then the Milpitas and Palo Alto, I was so surprised that Milpitas and Palo Alto, they are having a very similar cap rate, but at the same time, Palo Alto, their rent price is way above. Their ranking second in terms of rental price at $3,373, while Milpitas at $2,971. And then if you look at Morgan Hill, Gilroy is at $2,439, and East San Jose is at $2,340. But the Morgan Hill, they have pretty high cap rate at 3.9%, and also East San Jose at 3.7%. In terms of rent growth, East San Jose has pretty good rent growth at 4.32%, and they also have really good cap rates. So I thought East San Jose is actually a really good market in terms of if you're looking to invest. All right, San Francisco is a daily city. You see that is at 3.8% cap, and then their rental price at $2,581, while you see that South San Francisco at 3.5% cap, and then their rental price at pretty high is at $3,039 and $2,915 for Redwood City. And the growth for Daly City is actually ranked 2 at 2.54% in the San Francisco multifamily market. So multifamily demand will continue to be slow in 2023, and this is going to last until 2024. So if you do want to get a deal, this year might be a good time to get a deal on multifamily buildings. Thank you everyone for attending this, and I hope I'll see you guys next month. See you later. Bye-bye.